Hello, this is Professor Bolt on Tuesday evening after class today. I am sending this message primarily for the 11 o'clock sections because I felt terrible about the fact that I was not informed that you had an early release. I talked to 5-6 other faculty members in the School of Business. They didn't know either. Luckily, we weren't in the middle of an exam. We have notified the administration that we really weren't told that you had an early release. I hope you enjoyed your greater issues speech. So I want to talk to you about what we did not get to cover in that last 25 minutes. If you're in the 1:30 class, we did cover it. First of all, this quick check that you're looking at, this problem right here was one of the problems that we did in Go Soapbox. So we've already covered that. So now we're moving straight ahead to computing over or under applied overhead. And this is some key concepts. Nothing major, nothing monumental, because we've talked about it quite frequently. But overhead is considered to be underapplied. You didn't put enough overhead on a job if the overhead actually spent was more than the overhead applied. That means, oops, I underapplied it. But if the overhead applied through the estimate is greater than the amount that was actually spent, then you've overapplied it. And it just depends on the company's scenario. The goal is to try to get it as close as possible. Underapplying overhead is not so cool because then you've got more cost of goods sold than you thought. Overapplying overhead sounds great for a Christmas bonus if you did that problem, but then you've used bad data to make decisions with all year. So let's move forward to the next slide and try a problem. We have a company called Pear Company, and this problem kind of works in reverse, and this is a little frustrating for students, but let's look at what we actually need to think of. First of all, they have a POR of $4. This is the POR, and it was already calculated for you. Again, we talked about in class, sometimes this problem is calculated for you. And they actually had direct labor hours. So direct labor hours is your cost driver, DLH. That's your cost driver. So what we need to do is take the 4 times the 170,000 hours, compare that to this, and see if we're over or if we're under. So let's go to the next slide and see what happens. What we find is that if we take the 170,000 hours that was actual, remember this is the formula. The way to apply overhead is through this formula. And if we multiply it times the $4 rate, the POHR or POR, that's given to us, then we'll find that we applied 680. Now remember, 650 is how much we actually spent. We applied 680. Pretty easy. Difference is 30,000. And from there, we can say that we have a over-applied overhead of $30,000. So keep this in mind. They put too much overhead on the job. So all throughout the year, they thought they were going to spend more money than they did. Yeah, it's kind of like a Christmas bonus, but it's always best to have good, strong data. So here's an example that we can look at. In this example, it's one that's at the end of the chapter. $4 times $290 will tell us how much is the applied overhead. And so that's what applied is. And that is 4 times 290,000. We come up with this answer, and that tells us how much we have estimated. Remember, applied means estimate. We need to compare that to what they actually spent. So when you're doing accounting problems, you have to realize that this came first and this came second. So let's look at the answer in the next slide, and we find that we have $50,000 that was underapplied, and you can see the calculations here. We also did this one on Go Soapbox today in class with your cell phones. Okay, so what's the deal? If we've got money that we've over or under applied, how do we dispose of it? That's what we consider to be the disposition. How do you dispose of this $30,000 that we have over applied. So it's sort of like, wow, I went on a trip and I thought I was going to spend more. I put more in my bank account to spend. I've got some left over. What do we do? Well, this is too hard, so we're not going to do step 2. Instead, we're going to do step 1. We're going to close it out to cost of goods sold. So let's see how that's done. When we close it out to cost of goods sold, as you can see here, this is the overhead. Here's where they have accumulated actual. This is made up of real numbers that the company had throughout the year. They totaled up to $650. Hopefully you're thinking indirect cost. Hopefully you are thinking these are costs that it is not convenient or economical to trace. So at the end of the year, we applied our overhead based on this. And this is also where you should be thinking, okay, a POR was used to figure out this $680,000. But we've got a problem. We applied more to the job than we actually had, so we got to get rid of the $30,000, and we do that by adjusting our cost of goods sold. So remember that COGS, or cost of goods sold, is the last step. So we reduced it. It's interesting, in this scenario, we've reduced our cost of goods sold. Again, Christmas bonus time, if that were ethical, because they found that they didn't spend as much money as they had estimated. And that's the way this problem works out. So what's the final of this story? It is that, let's go back to the last slide. What you need to remember, it is that for our purposes in this class, this intro class, the remaining balance of overhead is disposed of in cost of goods sold. We're not worrying about the second method. So it goes to cost of goods sold. Good theoretical question, hint, hint. Okay, so this is the question that we had also on Go Soapbox, and the question is, what will happen when you over-apply overhead? What will happen to your net income? So this requires a student to think through 5 or 6 steps. It says, I have used a POR, and that was an estimate. I always think estimate when you think of predetermined overhead rate. I've used this predetermined overhead rate, and it was wrong. I put too much in there. I actually spent less. Well, I'm lucky. When I adjust it, my income is going to increase. And in fact, when we look at the answer, net income will increase. And that's the end of chapter 3. I hope this has helped for those of you that missed the last 30 minutes of class.